Good morning and welcome to Morning Markets. It's Friday the 22nd of December. Today we're going to talk about UK retail sales and what that means for the broader UK economy. This morning we had the latest reading on the UK consumer with the latest UK retail sales for the month of November. The good news is that the spending was far better than expected, but still on a year-on-year basis fairly flat. When we look at the numbers year-on-year, it was only 0.1% growth, so very flat. But if we look at what was expected of -2%, it's still a good result relative to expectations. On the month of November per se, the sales were up 1.3%. If we look at October, that was flat at 0%. So a pickup in sales in November. When we look at the details, the non-food store sales was where we saw strong growth, up 2.3% for the month. And that was really through benefiting from consumers willing to spend more due to discounting coming through from Cyber Monday, but also Black Friday, which very much is become more of an extended event for the month of November. So we saw an increase in volumes relative to values, and that really came through on the computer side, sports and cosmetics. When we look at food sales, they also increased 0.8%, and we also saw a pickup in auto fuel sales. We know that the oil price has been coming down over recent months, and that's feeding into car fuels, and therefore we're seeing a pickup in sales there. So overall better for November, but the 3-month trend still continues to slightly decline, and overall sales is still below pre-pandemic levels, so still a challenge for the UK economy and not seeing significant growth as of yet. Given this is the final video of the month, as we go into the Christmas period, we just reflect on performance in markets so far this month. We've seen another good month of returns from both equities and fixed income markets. After strong gains last night in the US market is up 3.9% for the month. And if we look at Europe and the UK, they're also month to date up around just over 3%. We also see strong returns in fixed income, sovereign bonds in particular, as yields have been falling, because the market's been pricing in more interest rate cuts for next year, given the positive trends we're seeing on inflation continuing to come in below expectations and getting closer to that 2% level. Today, we'll have the latest reading from the US. Expectations is for inflation to fall again from 3% to 2.8% and getting ever closer to that 2% target. Now, as we look ahead to next year, we will be introducing a slightly different format of morning markets as we look to optimise the content for yourselves as viewers. We will start the week with a quick overview of the key topics for the week ahead and why they're important to markets. Then Tuesday, Wednesday, Thursday will be the standard morning markets video where we'll be focusing on those key topics highlighted at the start. And then on a Friday, we'll be doing a slightly lengthier morning markets video where there'll be two of us discussing what's happened in the week and how that's affected markets. That's everything from us today. Have a great Christmas period, and we wish you all well for the new year.